Jason Bond from the Boole Microcap Fund. I'd like to give my investment thesis for the Paul Mueller Company. The ticker is MUEL. Paul Mueller is a company that manufactures innovative stainless steel processing equipment. I'd like to give a hat tip to Maj Suedan of Geo Investing for this great investment idea. Here are the industries that MUEL currently serves: dairy farming, biotechnology, process cooling, food processing, beverage processing, chemical processing, thermal energy storage, HVAC and heat recovery, water purification distillation, pharmaceutical manufacturing, industrial tank and vessel fabrication, and specialty transport and logistics, contract carriage. The company has had a high cash balance and virtually no debt for years. Mueller recently started buying back stocks at a PE of 8 or lower. Its first buyback was completed in April 2024 at $80 for $15 million. The buyback recently announced is for $15 million at $250. But the company still has $55.3 million in cash and only $6.9 million in debt. The company has little exposure to tariffs, as most of its activities are based in the United States, including recent facility expansions. But they do have a manufacturing facility in Vietnam. Mueller just reported Q1 2025 earnings per share of $5.26, up from $4.10 a year ago. Sales climbed to $58.9 million from $50.4 million. Q1 is usually the company's seasonally weakest quarter. Q4 2024, reported a couple of weeks ago, showed earnings per share of $11.89 versus $4.32 in Q4 2023. Q4 2024 revenue was $70.4 million versus $55.7 million for Q4 2023. More importantly, according to the Q1 2025 report, Mueller's backlog jumped to $254.5 million, nearly tripling from $95.2 million 1 year earlier. This is Mueller's highest backlog in years. If we translate the backlog into earnings, we get about $42 in earnings per share, or a forward PE of 6.9. One major component of the backlog is a newly announced $120 million pharmaceutical contract, which will be fulfilled through 2026. This is part of the company's strategy to enter new growth markets. Furthermore, in addition to the $30 million stock buyback, Mueller has launched 3 capacity expansions in 18 months, adding 131,000 square feet to its manufacturing operations. This includes a $17.9 million project in April 2025, part of the company's goal to modularize production by pre-assembling large units. According to the company, the modular assemblies shift complex construction from the customer's site to Mueller's controlled manufacturing environment and result in reduced risk. Building and testing large equipment modules in-house minimizes surprises. On-site construction in industries like pharma often involves tight space, regulatory scrutiny, and coordination with ongoing operations. By delivering fully assembled tested units, Mueller lowers the chance of installation delays, compliance issues, or costly errors. And faster implementation. Modular systems arrive ready to go. Instead of weeks or months of assembly at the customer's location, installation becomes more like plug and play. That translates to shorter project timelines, quicker regulatory sign-off, and faster time to value for the client. In the 2024 shareholder letter, CEO David Moore explained the advantages of its new modular assembly capabilities. The modular assembly of processing equipment allows us to set the vessels, heat exchangers, piping, and controls into structural frames shipped to the customer and installed as one module, reducing the time and risk required to assemble this equipment at the customer's site. This method is popular in the pharmaceutical industry, where the largest modules are known as superskids, but this practice has applications in other industries we serve. Moore adds, the current backlog, combined with investments in equipment and talent, puts the company in a strong operational financial position. Moore concludes, by producing components like tank heads, manways, heat exchangers, and machined parts in-house, fabricating a wide range of vessels, and performing modular construction in our factory, we significantly reduce the number of vendors, risks, and costs for our customers. The market cap is $269.8 million, while enterprise value is $221.4 million. Here are the metrics achievements. Enterprise value to EBITDA is 5.05. Price to earnings ratio is 8.95. Price to book is 3.19. Price to cash flow 4.92. And price to sales 1.05. For companies with MUEL's growth prospects, based on its capacity expansions and its backlog, these metrics are quite low. Insider ownership is 7.7%, which is decent, worth over $20 million. Return on equity is 39.7%, which is excellent. The Piotrowski F-score is outstanding at 8. As noted, the company has $55.3 million in cash and only $6.9 million in debt, and total liabilities to total assets is 50%, which is pretty good. Here are the intrinsic value scenarios. Low case, if there's a bear market or a recession, the stock could decline temporarily. That would be a buying opportunity. Mid case, the 4P is 6.9, but should be at least 16. This translates into a share price of $667.83, which is over 130% higher than today's stock price of $288. High case, arguably the 4P should be 20. This translates into a share price of $834.78, which is 190% higher than today's stock price of $288. Risks. As noted, there could be a bear market or a recession that would likely drive the stock down temporarily.